What's up, everybody? Now, I'm by no means an experienced trader. I haven't made massive amounts of money trading crypto, but my technical analysis has been improving, I feel, drastically. And more importantly, my risk management when trading has been improving recently. And with my risk management improving, I feel like my overall mind state when trading has gotten much better. Um, when I'm not risking an amount of money that I'm afraid to lose, it makes me a lot less anxious when I'm trading. And, first thing I noticed when I started trading was I would make bad decisions when I started getting anxious. And having more confidence in my trades, sticking to a strategy, and managing my risk has greatly benefited my trading. And I have a strategy that I've been using for, about 2 months now, I'd say. And like I said, I haven't been massively profitable. I'm trading with a pretty small amount of money, but my win-loss ratio is definitely going up a little bit at least. And when I do get stopped out, I'm not losing nearly as much as I used to be because I'm getting better entries and I'm prioritizing risk management over everything. Now, when I'm looking to take a trade, what I'm looking for is to get a good entry with low risk. If you get a really good entry, if you plan out your trades ahead of time, if you have a level that you're looking to trade off of, it gives you a really tight margin to where you can enter your trade and have a stop loss really close to your entry. So you're not risking a lot, and if you do win the trade, you get the best possible entry for it. So obviously, the first step is you want to plan out your trades. You want to have levels on your chart, and the more time you give it, the more accustomed you get to looking at charts. I feel the more you can kind of start to understand it better, and you really don't have to put as much effort into planning out your trades. You definitely still have to put an effort, but it kind of comes more naturally the more you get used to it. But if you give it the time and look at the chart, you can find these levels and you'll actually find that they have lots of significance when you're trading. So one of the first things I like to do is I like to have a range set up. So if we're trading sideways, kind of like this, where we're sort of trading inside a range, I kind of like to have the significant levels of the range marked out. So, obviously I have this one. It is a pretty strong resistance level. We poked above it a few times. We got lots of resistance off it. So I'm going to mark this level out because if we come up to this level, then there's a chance that we reject off of it and we can get a trade off of this level and have a tight stop loss right above it. You can also use the Fib Retracement tool right here. That is a great tool for finding levels that price could bounce off of. For example, just going from this swing low to this swing high, we got the golden pocket right here. You can see that price bounced off this golden pocket area of the Fib Retracement tool, and from there had a pretty good pump. I just recently made a video about how to add this red 0.65 level to your Fib Retracement tool and how to trade with the Fib Retracement tool. So if you want to learn more about that, check out, I think it was 2 videos ago, maybe 3 videos ago. But this is another way that you can get significant levels to trade off of. Specifically, I found that the 0.382 and the golden pocket were the 2 levels that price likes to bounce off of most often. So if you're trying to learn how to find these significant levels, those are 2 of my favorite ways to do it. Just going on the chart, finding significant support and resistance levels. Like here's another one right here. We bounced off of it twice here. There was some resistance over here. So if we're trading in a range, just kind of mark out some of these levels. If we just had a big pump like this and you're looking for a level that price might reverse off of, the Fib Retracement tool works great for that. So that is step number 1. Having levels with good probability of reversal marked out on your chart. So next, as price is approaching one of your significant levels, you're going to want to check your indicator or indicators for confirmation. Now, I know not everybody has Market Cipher, but there's plenty of free indicators on TradingView that you can use. It just might take some time for you to go through and find the ones that you like to use. But let's say we're back at the end of October, price just pumped up to 67K over here, and we're looking for Bitcoin's price to maybe find a bottom here and look to long the reversal. If you had this Fib Retracement tool pulled out from this swing low to this swing high right here, you can see that price came right into the golden pocket. So as price is approaching that level, you're going to want to look for confirmations on your indicators. So you can see that we were getting a green dot on the 4-hour as price was coming into this golden pocket. So the higher time frames were showing positive indications. Next, I would want to zoom into some of the smaller time frames. And on the smaller time frames, what you want to look for the most confidence in your trade is what is called divergences. Basically, what that means is the indicators are disagreeing with the price action. So this right here is when price was coming down into the golden pocket. You can see price has obvious downward momentum while the indicators have upward momentum. And basically, this is the best recipe for finding entries, is when price comes to a significant level, you have bullish divergences while we're coming into that level. And let's say you don't have Market Cipher. You can pull up TradingView's free RSI tool and you can see a very similar thing. You can see a bullish divergence with the RSI here, and maybe you can use that as your confirmation to enter this trade. Alright, so step number 1, you had your levels marked out. You realized that price was approaching one of your levels, and so you checked for confirmations in the indicators, and the RSI was bullishly diverging from the price, showing that there's likely to be a reversal soon. And so you want to enter a trade. Now, this is the most important step, at least for me, because I had trouble with this at first. That is managing my risk. But like I said, when you use this strategy, it gives you a very tight window to set your stop loss, and it makes it a lot easier to manage your risk. So everybody has their own risk tolerance. For me, I like to risk about 2 to 5% of my entire trading account per trade. Now that might seem like a lot to some people, but like I said, my trading account is not extremely large. So maybe someone else with a larger trading account will have a lower risk tolerance than me. Either way, if you are trading off of these significant levels and you have the confirmations, then it should be pretty easy to manage your risk and set pretty tight stop losses. And finally, something that we all know but never do is take your profits. Now, taking profits has been something I also struggled with. I've probably lost just about as much money watching my unrealized gains go down the toilet as I have with my stop losses getting hit. Not exactly sure. It's probably pretty close though. So what I've done in order to try and fix that problem is I've started setting take profit limit orders, so that way I don't have to manually exit my entire position. I can have half of my position or 3/4 of my position taken out if price reaches a certain level. And that, I feel, has been a big player in improving my trading as well. Now, if you can look at a chart and see that it's showing topish signals and, exit your position all at the top and get the maximum profits, then good for you. But in this case, if you weren't paying attention right here, price could have dumped all the way down here past your stop loss at the swing low, and then you would have been out of your position at a small loss. So that is why I like to stagger maybe 2 or sometimes 3 take profit orders on the way up. And I've definitely noticed that because of that, I'm taking more profits than I used to. I'm not missing out on profits from taking it out of the top because most of the time I never actually took it out of the top. And like I said, I do still leave like half or a quarter of my position open most of the time, so I can practice exiting my positions when I start to see bearish signals in the chart, like bearish divergences. For example, this right here would be a bearish divergence on the RSI. RSI coming down as price is coming up, and there was a little bit of a dump here, so you could have played that if you were paying attention then. So yeah, guys, that is my current trading strategy. I mostly scalp trade with this, but the way I like to think about it is I scalp trade and sometimes my scalps turn into swings. So that is why I like to leave half of my position open or something like that in case price breaks out of the range it's trading in, and we can turn that into a swing trade. All right, guys, I hope this was helpful. Good luck to everybody trading, and hope you all have a great day. Peace out, everybody.